Hey everyone, I'm going to go over the Baidu stock chart. A couple of days ago, I sent out a buy signal on this stock, and I wanted to do a video to review why I sent out that signal. So let me go ahead and go back or take a look at the bigger picture and see where Baidu has been. It's been on a pretty big uptrend. If we look back into this area here, we can see here that it was in a downtrend before, and we could draw a downtrend line. And when you see a downtrend line like that, you got to think about the chopsticks pattern for a reversal signal. And sure enough, we do get the reversal signal in this area here. We had the first breach of the downtrend line in this area, and and then we get it establishing the buy signal here. The buy signal is when it creates a new high and pulls back, and so what you want to see is for it to break into new highs to confirm that it is now making a lower low, a low, a high, a lower low, and then a breakout into new highs, and that is a reversal trend, reversal signal. And so in this area here, you had your buy stop, and then you had a huge move. If we measure it out to the high, recent highs around here, we can see from this downtrend we had a significant move of 143%. Now you'll get this type of return if you are a buy and hold investor. If you like a stock and you're a buy and hold investor, using technicals will get you the best entry point, most precise entry point for a big uptrend move. A buy and hold investor would have to sit through all these earnings. Now, for myself, I'm a trader. I wouldn't sit through all these earnings, so I would not catch the entire move, but portions of the move, and that's okay with me. I'd rather make the chunk of the profit, but not hold it through so many different risk elements. So another thing I wanted to talk about, the reason why I went into the weekly chart, is that I wanted to talk about the proper stop for a chopsticks pattern. And the proper stop is the most recent swing low, which you see is here. This is a support area, and it provides a swing low. A swing low is the lowest price within a recent area, and this would be your swing low. There are no other lower prices here. This was the lowest price. So the proper stop is in this area, and the reason for that is if this was truly the bottom of the chart, prices should not continue lower. And it doesn't mean though that once it makes this high, it doesn't mean that it's not going to go all the way pretty close to the same spot. So you want your stop to be below here, or maybe a little bit lower, to give it some room to work its way into a new reversal pattern. You got a lot of bears and bulls probably doing their last fight here. The bulls are saying we think it's time to go higher, and the bears are saying, hey, no, we want to go another leg down. So you got to give them time to hammer it out and see who's going to win. And sometimes the bears can be pretty aggressive and try and get it back down below this low, and so your price is going to be pushed down here. If you set your stop too close to this area, you're easily going to get stopped out. If you put it along a 10-day line, you're possibly going to get stopped out. In this case, you did get stopped out. Now, ideally, everyone wants to see a breakout, V bottom breakout, where you break out and you just go straight up. But that's not reality. You need to give it room to run back down to this swing point. Now, if it does break this swing low, you'll get stopped out. But you also want to watch the reaction, which I've talked about previously. When a trend line or a support line is broken, you want to watch the reaction. It doesn't mean that it's definitely going to go down. It may just break down 1 week here on the weekly chart, and then the following week it might make the same candlestick of equal heights and regain that entry into the support line, in which case you have to have the courage to buy back the stock at that price. And because once the trend line breaks and it heads back up, it can easily continue higher. And in that particular pattern, that would be a W bottom. And so just because it breaks here, you get stopped out, doesn't mean the stock is done. It can easily reverse again. So, but in most cases, on the very strong momentum stock, it won't get back to this area. But in case it does, you need to give it room to run. You don't want to get stopped out and miss this huge move. So that's a weekly chart. I also wanted to show here, the aggressive trader would have gotten in probably on this week and pulled back into the line. The safer trader would have waited for this higher high and bought it in this area. And if you bought it in this area, you wouldn't have seen too many confirming signals of the breakout. You would see possibly a W bottom here, but if you waited to this day here, you would have had a better confirming signal. So you had to wait for it to make a high, pull back here below the line, and then break out above it again. And on this line, you have seen probably a breakout of the trend line, the breakout of the 10-day line, and also a inverse head and shoulder breakout. Not breakout, but formation. The head and shoulder doesn't break out until later on. But you would have seen here, this would have been the shoulder. Now, the early entry is fine. You just have to know that you're going to have to give it room to pull back and then head higher. And in the trending stock, the low should be a higher low, and it will never ever go back. Okay, so that's something to keep in mind. I'm going to do another video about risk management, where it's you have to make it easy for yourself to hold to this point, this swing low. But here you go, you have an inverse head and shoulder, you have a breakout on this day of the trend line, you have a breakout of the 10-day line. All three signals suggest it would go higher. One other thing, let's see. Oh, I wanted to go ahead and show you a measured move, another one, so you can get an idea how measured moves work. Here's the neckline for the inverse head and shoulder. Here's the measured distance. I'm going to go ahead and clone that and measure it up to here. So in terms of price target at this time, we were looking at this area here. And if you take a look at this area here, you see it's a couple of weeks of very tight trading, consolidation. It's more than a 3 weeks tight pattern, but you can see here it was trading very tightly. This would have been a good secondary add-on point of the breakout here when it breaks out above this consolidation period. But you can see how the measured move gives you an idea where stock will, change its behavior, I guess. It'll either go back down, it can either consolidate and head higher, or it can either head higher. But the measured move itself is not a definite sell signal. If you just sold here based on the measured move, you would have missed the rest of this. However, the measured move does give you a good indication of, an area to watch. So that's the weekly chart. And from this point here, stock made a significant 143% move for those who are the buy and hold type investors. So let's go ahead and look at the more recent history. Here it is on the daily chart. What we have here is an all-time high and a pullback. And if we measure this pullback here, it's about a 20% pullback to this low right here. So in my previous video on AMBA, I said the best stock setups, or the best setups for the chopsticks pattern, is when you have a powerful stock with great earnings, great fundamentals, making an all-time high and then pulling back about 10 to 20% from the top, and then you see a breakout of the chopsticks pattern. So far this looks like it. This is a good pattern here. The only thing I don't like is the fact that it's kind of been wobbly around the 10-day. It hasn't been like a nice orderly pullback along the 10-day. It just means the stock is a wild stock. It can fake you out. So you'd have to have a lot of balls to hold this stock, because it can probably shake you out much faster than you think. So looking at the technicals here and looking for any type of confirming signals on this breakout here, I sent out the message to get into Baidu on this signal here of the breakout of the downtrend line. Here it broke out above the 10-day line. Here it broke out with the 10-day line, which I always like to see. But also here, I think on earnings, it had a gap down, but was able to recapture the trend line on huge volume. That is a reversal signal, and also we came back and retested that line here and here. So we definitely can say we have some level of support at this price. And then also in terms of other patterns that coincide with this, we have a W bottom with the same buy point as the breakout of the chopsticks, and that is another confirming signal. And so the more signals you see, the higher chance of success. So that's why I said, this is a buy signal here. It tried to break out on Friday, but got pulled back, pretty solid pullback here. So we'll have to wait to see, give it some more time to work out the pattern here. One other thing I wanted to talk about, I forgot to mention, and we'll go ahead and take a look at the weekly chart again. When we got this high established here, it took about 1, 2, 3, 4, 5, 6 weeks for this to get into a new high area. And not only do you have to hold as long as it's above this stop here, but you really have to give it time to break out. And I'll show you an example where I did not hold to get my breakout. Here's Kite's chart, and on 2/11, on February 11th, in this area right here, I sent out a message to buy the stock, because here was the downtrend line, and here it is on this day establishing a buy stop high, and I held it maybe until around this area a couple of weeks ago or last week, and I sold it because I was really tired of holding this stock. It didn't seem like it was moving anywhere, and also because it's a biotech, which can swing pretty wildly on any sort of news, and buy stops don't really help if there's a gap down. So because of all these concerns and just being impatient, I sold out somewhere around here, only to have it break out a few days later. And when on this day, a lot of biotechs just went crazy. It looks like it retested support and could possibly head higher. But I was knocked out because I was impatient. If you look here, the swing low, it has never gone below that swing low. On this day, it retested, but it has never gone down below that swing low. So if you were the patient investor and not the impatient trader, you would have caught this move. Even with the pullback on Friday, you would have been up 5.5%. Most likely, this will continue head higher, and you would have bigger gains. So that's something to think about. You have to give it room to run, work out its consolidation, and then you always have to give it time to consolidate or break out. So that is the setup here. One last thing is, when you have a downtrend like this, you have a breakout of the chopsticks pattern. This is generally an indication this may be a cup and handle pattern, and if we did that price target wise, we're looking at 251 area. I'm going to pretend that it's going to get back into that area right before earnings, because oftentimes a stock would like to set up right before earnings and break out after the results on earnings. So this kind of has a nice cup cup pattern here. We're inside the cup, and we can head back here. The measured move, or not the measured move, but the price target for this would give me a 15% return on this trade at the 251 level. So that is the setup that I'm looking at. That's why I sent out the buy on the Baidu, and so hopefully we'll get a good trade out of this. We'll get 15% by earnings. Sell out of it. Watch the reaction of earnings, and if it gaps up, I'll probably get into it and hope for higher. So that's the trade. If you liked this video and you thought it was helpful, subscribe to my channel, please, and get notifications of new videos, new setups, and reviews of trades that I'm doing. So thank you for listening.